The pro-bailout New Democracy Party won the Greek vote by a narrow margin on Sunday. India's central bank left interest rates in the cash reserve ratio for banks unchanged, disappointing markets. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with The Street, and together we bring you the morning call. Initially, markets reacted favorably to the news out of Greece that the New Democracy won the election, but now Spanish 10-year bonds are over 7%. So what do you make of all of this, Scott?
I think people just know that the problems are far from over. And last weekend, they had the Spanish bailout, and we came in, the futures were up 10, 15 handles, and traders just sold it. So I think with a flattish open, it's probably a bit better. I know that traders love immediate gratification, so anyone looking to be long would love to sell into an up open, and anyone looking to short into a bigger resistance probably were ready to get going if we gapped up to short it. So right around here, I think it's a quiet trade. Now our eyes will go to the Fed and to what comes out of the G20, and we're probably going to still get whooped around by all these headlines that we see, moment to moment.
So what areas in the S&P are you looking at to hold for commitment?
Well, if you remember the chart from last week, we were a little forward-looking. We were talking about the inverted head and shoulders pattern. Right. A nice roadmap to navigate where we had defined support, resistance, and they were very tradable. If you look here at the chart of the SPX, you will see, first remember the head and shoulders top. Here was the left shoulder, the head, the right shoulder. Gave us a nice navigated move all the way down into the lows. And then we start to see this inverted head and shoulders pattern. So if you take a closer look here, you will see that here was, the left shoulder. Then you had the head when we broke below the 200-day and we reclaimed it. Remember my rule, if you break below the 200-day and reclaim it within the next few sessions, 2 to 3 tops, it's more of a trap to the downside, so that means they trapped them. And anyway, you had to move off the lows. We were trading versus 1306 to 1309, which held, showing some commitment to this move off the lows, and then we were all looking for some type of move above this neckline, above 1330 or 1325, and we got it, and we closed on Friday at 1343. So if we gapped up, we would have been gapping up right into some major resistance between 1348 and 1358. So here, with a soft open, I'd rather see us go sideways a little bit. We might have to do some work like we did here. So holding above, just say 1333 to 1335, this would be a high level that would make it very easy for intermediate guys to hold on to. We could actually even pull in to this area, maybe closer to 1313, and we still would have a higher low based on this pattern. So right now, market still has a lot to absorb. There's no reason to run away, and I think that they didn't want to just keep it going into the Fed because then maybe they'd be a little less accommodating.
Right. Energy was one sector that really boosted the markets last week. They came off the lows. There was optimism that the central banks would offer a coordinated effort to support Europe. Some people are thinking we might get more QE3 this week from the Fed. The OIHs were up 4%. Is this sustainable, though?
This has been a laggard group, and oil bounced, so this group bounced. Some of the big stocks within that name or that area had a nice move. So if you look here at the chart of the OIHs, really not a lot to get excited about except for if you did sell correctly, if you sold when it broke first this trend, or you sold when it broke this major support. Down here as a cash flow vehicle, it seemed okay. And if you sold right, maybe you position, and as long as it continues to move up, you stay with it. So if you look here, you had this outside day below 34. It held above it. You finally had a little bit of upside, and for the OAHs, this is what you call upside. And now, it's dealing with a bit of a downtrend here. I would say if it start to get above this 35.84, your next big level will be about 37.70 to 38, and then a huge wall here at 40. So I think this is more of just a bottom feeder type trade. If you want to be long on a macro level, just be tier 1 versus pivot low. But as a trade, here's the roadmap. It's not that exciting.
Looking at some of the big components there, Chevron was a name that Stephanie Link was buying on Friday. It's a name they had owned in the past. She likes it for the high quality assets that they own, the strong balance sheet. They've got $20 billion of cash, a pretty nice dividend yield, and it's trading at a discount to its historic averages and about 2 multiples less than Exxon.
Yeah, well, this one participated at least. You want to see when a market rallies, you want to see the stock you own participate and even outperform. And as far as this group, this one did well. If you look at the chart here, you'll see, a nice little pivot low down here around 96. You had a gap and go on this day, which showed some pent up momentum here. This was actually on June 6th, so it gapped up and closed strong. Then you saw some commitment, just like the market, putting in a level it held higher. So yeah, I think at this point though, you had some follow through from 96 to 104 into the moving averages. I would say I wouldn't be in a rush to buy. I'd rather see play the pullback. But overall, it's above the moving averages. At some point later this year, if you look at the macro pattern here, it actually looks like a decent one where it's close to the highs, but it's going to take a lot of time, a lot of work to get through this 110. But at this point, you have a low, a higher low. It's just coming back into resistance. As an investor, you haven't really been so worried. You're not here, you're not lagging the market like a lot of names in this group. So as a trader, I wouldn't be chasing here. As an investor, if you're in this name, I think you let it play out.
ExxonMobil's had good performance so far this year, a little bit better than Chevron, but it's trading, like I mentioned before, at a higher multiple, but it has lower growth, lower margin profitability per barrel also. So how's this look compared to Chevron?
It's funny, when you look at both of them, or you look at them from a longer term to shorter term level, I know that Exxon got crushed. Okay, it was in that channel, it moved lower, but now I take a longer term view at it and it looks a little bit different. Here, if you take a look at the chart of Exxon, you'll see, it had a big move off of, remember, from this July-October area, came back in, and if you look recently, what it's done, okay, it's really made a series of higher lows. You have a low, a higher low, another higher low. You have defined resistance up here, on a short-term level. If you were trading it, versus breakdown here, you could take a look at the daily chart and you'll see that, this was your way out. Remember, it couldn't break above. I tried it a few times, and then it came all the way in, and now it's rallied back up to retest this broken area. So again, I would not be chasing this as a short-term trader. I think some traders are going to probably try and short this into this 84, 37 on the first attempt. And I think short-term guys would like to see a move back to here to rebuy back. So as an investor, I think you're okay. As a trader, I'd rather be selling that resistance area than chasing it up here. There's not that much more room, in my opinion.
ConocoPhillips has some resistance at its 50-day, I believe. They just spun off their refinery business, Phillips 66, last month. So where does this stock go? What levels should we be watching?
This one also looks the same. All three of them had a nice move.
Yeah.
So, you don't like to chase moves. If you've been watching this show, we don't chase excitement. We don't chase moves. We get in there tactically. And I think on all three of these, you had your tactical entry already. And now if you look at the chart, there's not much left or excitement here. Yes, does it have room to the 50-day moving average at 55.91, kind of get back to these old highs? But tactically, in this environment, I don't want to see you chase it. It kind of broke above this small little downtrend. It held higher. I would rather see you buy a little bit closer to this, 53.50 area versus chasing into this resistance, because if you chase here, you might not be able to hold if we get that pullback. So at this point, it looks the same like the other three. I don't think you need to be in all three. Pick one, whichever one you feel a bit more comfortable with. And I think Chevron is probably one that would be best to go with.
Yeah, it's hard to chase those energy names into the resistance. Well, we're going to look into some of the stocks that have led the market after this commercial break.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're going to look at some of the stocks that have typically led the market, but more recently haven't done so. We're going to kick it off with Apple. We're in the trenches here. They lagged over last week. So what does this mean? Is this a bad signal for the market?
I don't think it's a bad signal yet, but typically a healthier market, you have Apple leading the way, you have tech leading the way, and the last 2 days of last week when the market bounced, Apple just hung around. And there are two things going against it. One, if you remember the event that it had, they sold it. So it created a pretty short-term negative day. So that takes a little time to be worked off. So after a few days of consolidating, it's now do or die time, in my opinion. If you look here at the chart, you will see that here was that outside day. That was the day that it tried to break above short-term resistance and failed. Okay, and what you had to do is you had to see what happened next. And what happened next is really not much. It held in there and it kind of negated some of this weakness. And then for the past few days, it's also been hanging around. So for me, I'm long a little bit. I'm a little concerned that it's lagging. What I would like to do is if I could see some huge volume, if I could see it take out the 50-day, the 50-day right now stands at 578 or 577-ish, I would be a buyer of this and finally can get in motion. But I'm going to love them and leave them. If this thing can, hang out above 567 and starts to break below, I'm going to get out of the way and then see how it handles the 100-day that keeps rising, that is now at 558. Last time it hit the 100-day, it was a really nice trade. Maybe it's waiting for it to catch up at this particular point. You have your inside range. I think as a macro investor, you're fine. Stay the course. It's one of the best companies out there. Fundamentally, it's still undervalued as a trade. I think it could tell us what to do over the next few days.
Yeah, it's a great high-quality name. JP Morgan was a great high-quality name in the bank space, but got really beaten up with its trading loss that they announced in May. But it seems to have kind of bottomed and acted a little bit better last week when Jamie Dimon testified in front of Congress, and he'll be in front of the House panel again tomorrow. So what are the key levels we're watching?
Well, if you remember, I don't know if you were with me or Brittany, but the day they finally came out and announced their $4.2 billion loss was the day the market reacted positively, and that's how you know when something's washed out. First time they came out with the surprising news, it gapped down and didn't find a friend. And finally, after getting crushed about 16 or 17% on that bad news, when people said, "Oh my goodness, it went from 2 billion to 4.2 billion," they bought it. So some scratching their head who don't know how to follow the market with the buy the rumor, sell the news, or sell the rumor, buy the news type of atmosphere. That's what you had here. If you go to the chart of JP Morgan, you will see right here was that day. I remember being here. It was down 30 cents. It reversed. That was a good spot to cover your shorts if you were short. And if you also saw some of this relative weakness and saw it start to roll over here, because that's what it was doing before this news, you had the chance of buying back. And then if you missed the bottom, because a lot of people do, you don't need to buy on the bottom. When you saw some of this commitment, higher above this area, this was your spot to nibble. Okay, now it's creating another little area here, I would say. If it can get above 35.07, you have some room to the moving average here around 36.28, and then there's the gap. So at this point, it's been a nice bounce type trade. If you bought it back for a tier 1, I would not be getting aggressive. And it's been better to buy the weakness in the banks than the strength, because anytime you add on strength, it's been ruining. I know it ruins my average cost and makes it a little bit harder to hold.
Right, exactly. MasterCard is another strong name. It's been holding some key levels of resistance. Can this see more upside, though? I feel like it's been really strong.
It has, and it had a nice move, and leadership stocks typically act better when the markets bounce, and this one gave you a few entries. It also gave you a few shorts, too. So at this point, as I look at this chart, I think that the tactical trade here is somewhat over, too, because if you guys remember, here is that uptrend that it broke, to the downside. First, you had this outside day right here. When it made a new high in reverse, that was sell signal 1. Here's sell signal 2. And then here is where it had the same day probably when everything else reversed, but it showed a little bit more power, because what did it do? It traded above the prior day high versus just matching it. And then, so you had a quick move into resistance, held higher, went in motion with the market. I think there's just going to be a wall of resistance here at 440. If you're a macro investor and you're still in this stock, I think that it's still acting well. You still have a really nice uptrend. I would say use this 381 as your stop. So at this point, if you're still there, that's fine. As a tactical long, I think that traders are going to probably try and short into this area versus just buying the first time there.
Let's do some quick hits. We're going to start off with tech. We got a boost on Friday and a bunch of tech names. People were saying it was option expiration. One of the names that benefited from that was Zynga. This is a stock that's really been beaten up. About 35% of the shares are sold short already. It got a bunch of upgrades last week, though, too. Can this see more upside?
I think it's, again, a trash for treasure trade. If you sold correctly, you could tactically buy. And this was more of, I think, a Facebook finally bounce, which we'll get into after this. Stock went from, 14 down to 5. So how much more downside was there? If you remember this outside day, this was the day that everyone was saying it has to go to 16 to 20 on the Facebook news. And obviously, the street sold it. And then you had another way out right here. Remember this, when it crossed below this support, which was at 11.25. Moved down, and then you had a few different exits here, and it's tried to rally a few times. Here you had a nice decent day. I would say if you went long on Friday, you trail it. book some probably sold on the close, but trail it. You probably have some room to 623, and if you do see a bit more excitement, perhaps you can get to 7. So if you long it, be long it versus low here of 478. With a little bit of consolidation, I think some of my guys might even be adding if it can get through Friday's high of 560 for that quick move to about 617.
Facebook, we got to look at it now that we've looked at Zynga, because Zynga gets a lot of their profitability or a lot of their sales from Facebook. It's been acting better lately.
Yeah, and finally, everyone stopped talking about it. And there are 2 strategies. Everyone who has a thesis, leave your thesis on the side unless the market confirms it. And there are 2 ways to enter Facebook that we talked about in the last 2 weeks. Everyone knows the red dog reversal, the 80-20 trade. The reason why I love it is because it gives you a calculated entry that you could use for action, or you could use to stay with it. And if you look here at the chart of Facebook, you will see, here you go, I'll make it nice and wide. You had 2 red dog reversals. One didn't work and then one did. This was the first time it really did it, where it traded through the low here of 27.86, made a new one, came back above. That was your entry. Okay, I remember doing it that day. I did it for cash flow because I usually take a lot intraday. Then I sell on the close. I took a third and lost. Here, from a lower level, it tried it again. If you wrote down this low here of 25.75, went as low as 25.52. Once it went below, came back above. That is your entry, 25.75. And what did it do? It never broke below. So if you got involved and you wanted to do it as a swing, you never had any pain here and you could have stayed the whole entire time. I know for me, I did it as a day trade and I probably got out here. But then if you got out, you had another entry. Remember this 28.10 we talked about on Thursday? It went above it and closed above it at 28.32. So this was on my virtual floor. I tweeted, I said, I'm buying it today. I like the way it looks. Guys are like, are you taking it long? I tweeted, I'm taking it long. And then look what happened. So that's Friday move. It's coming into some bigger resistance. I sold more than 75% into the close. And I think right now, if you want to be tactical, if you're still going to trail it, you go to your 5-minute chart. You see where there's some support. This last move came in at the end of the day. I'd say as long as Facebook, I would even give it a little bit more room. 29.40 would probably be a dip to buy, and then even down to 29.20. So today on some weakness, 29.40, 29.20, I would be a buyer. If it doesn't hold that area, just get rid of your trailer, and you caught yourself a nice trade.
Clorox is a name that Stephanie Link has been she's been building a position in this stock. It's a defensive play. 70% of the sales are in the U.S. They've got a great turnaround story going on here and a good dividend yield. But what does the stock chart look like here?
Well, this is a little tricky because when the market finally had some follow through, what do? They probably sell some of the defensive names.
Right.
So if the market's going to continue, maybe this gets more weakness. And if you look here on Friday, it doesn't have to happen. I see an outside day. To me, this is always a sign to take a little bit off. So if you go look at this chart, you'll see you still need to enter the right way. And right here, when it broke above this resistance, that was a nice entry. Then you go into this little flag type pattern, you had another nice entry. But look what happened this time it tried to break out. It got engulfed. So this, in my opinion, is a short-term sell signal. Not end of the world, but what did it do? It traded above the prior day high for momentum and lost it. So people sold into that. And after a move from 67 to 73, why not? So I would say this stock is prone to pull back. It could pull back right here, 71.82, and it could even pull back, to this area. So for me and for those looking to buy it, this could be an opportunity for you as it trades back down to this, 71.50 to 71.80 area. So hopefully you took some off the table here when you recognize this outside day type of pattern after a big move from 67.
AIG is a turnaround story in the financial sector. They've got some balance sheet enhancing initiatives underway, but what does the stock look like?
To me, I trade this now 3-4 times a year when it's so compelling. It has to be very tight. It has to be, it just has to really call my name 100 times and not by analyst upgrades, by the chart. And right now the chart's telling me it's in no man's land. You take a quick look here, you'll see it had a nice move off the lows, decent rally into resistance. If you're holding it, stay with it. It's above the moving averages. If you're looking for a trade, I don't see anything really tight here.
So we looked at a lot of things today. The energy sector it's going to be hard to chase, so maybe stay away from that. What are the other? Go over the key levels that you're looking at just one more time.
Well, if we talk about the S&P and the diamonds, it had a nice move. Okay, so a lot of people were talking 1328 to 1333. That's a level that I'd like to see hold in the SPX. If you want to take a quick look at the diamonds, because I used that as a vehicle last week, and it didn't go ex-dividend. Here you go, the same inverted head and shoulders pattern. I think for this to be healthy, you want to see this hold at least this 125.22, and I think even shorter term guys would like to see it hold higher, which is right around, I would say, 126.10. So this would be your area to buy back, and this would be an area that if it pulled back to, it would be fine. Because if you look where we came from to where we went, you have a big moving average in front of it, big resistance. So I would say you still continue to buy on weakness and be very selective, and just see more commitment up here, and don't get whipped around by the headlines or have an opinion.
Right, and there's going to be a lot to watch. There's going to be a lot of headlines going forward into this week, as we mentioned earlier, the G20, the FOMC. So these are just some things that we're looking at now. Trade tactically, and be sure to check in at the end of the day with Scott and his team for the daily recap to see how we did.